Today, I am talking with Peter Kennedy, which is my fellow colleague at Electo Finance. Welcome, Peter.
Thanks, Pete. Thanks for having me on.
Introduce yourself to our potential clienteles and people out there.
Cool. So, as you mentioned, I'm an associate of yours at Electo Finance from a mortgage broking, finance broking point of view. I've also got my own consulting business in property advocacy, amongst other things, and also do some work for the Pat Cronin Foundation to end the coward punch. So, involved in all sorts of stuff. Really passionate about helping people, and hopefully, share some of my insights that can help some other people. So.
Yeah, awesome. And that's an awesome cause as well. It's a very sad and tragic cause that happened to young Pat, and it's great. Your forefront and vying for it to stop the coward punch.
Yep,
as
absolutely.
well. So yeah, it's
appreciate the support
that you do. So today we are talking about a topic that is on a lot of people's minds, especially people that are in the single market. So people that are thinking that they can never get into the property market because they are single, or they think because they don't have a partner and they can never afford a property. We're going to speak to Pete. Pete's going to give us the rundown of how that is going to change. And being single doesn't mean that you can't opt in to buy a property or an investment property or a first home. Pete's going to give us the rundown of how this can still be a reality for some people and a lot of people. So firstly, we've got some topics that we'll discuss. So main questions that we get a lot of as brokers, as well as, everyday people, is, should I buy a property with a friend if I'm single? Should I buy a property with a family member? Am I better off buying the cheapest property that I can find just to get into that market? And how about buying student accommodation? How can we do it? So Pete, I'll come to you. So should I buy a property with a friend is the first topic that we'll discuss. And, being single in the single market, a lot of people are saying that, there's no way they can afford on their own income. Is it true? How can we change that perspective of everyone's mind?
Yeah, it's interesting. And some of this stuff can be sort of generational stuff. So, generational, there can be pressures from, older generations or whatever to say, you've got to get into the property market. You've got to buy a property. It doesn't matter what you buy. You've got to be in property. You've got to own that place. And, so sometimes that can be really internal pressure that you feel from loved ones.
Yep.
However, there can be quite a change and a shift in relation to how you can do it and how you can do it well. And one of the suggestions I see is that people say, oh, look, just buy with a friend. I buy a place. We'll pull our money together, pull our incomes, and we'll buy a place and we'll make a fortune and let's go. And they'll go, hey, yeah, happy days. And they go, they find a place, speak to a real estate agent. Yeah, great. Let's do the deal. It gets done. So it might be, happy days.
Mm-hmm.
Reality is, if you look at a single person who buys one asset with a friend, so let's say you and I bought a property together, right?
Yep.
And everything's honky-dory, everything's working well, things change. Okay, so, one of us might end up in financial hardship, we might have health issues, we might have a new relationship or whatever. So things change. So if any of those things change, and your money and my money is tied up in one asset, and one of us needs the funds, guess what? We either sell the property or the other person has to buy us out.
Exactly.
Now, remember, we bought this property together as mates because we couldn't do it on our own.
Yep.
So the option of you or I buying each other out is virtually non-existent.
That's right.
You've spent a lot of money buying this property. So if you've spent, say, upwards of 5% in stamp duty or whatever to get this property, and then you've got to pay an agent to sell it, and you've only had it for a shortish period of time, then you're going to go, ouch, that really sucks, right? The other thing you could potentially happen is you and I buy a property together, we're friends. You might be in a relationship, I might be in a relationship, but we've decided to get this done together, and one of the relationship ends. Well, there's an asset, and then there's a separation,
Exactly.
financial settlement. Guess what? There's then pressure again. So don't buy with friends. It's just not worth it. So
Doesn't matter how desperate you are to enter the market.
Absolutely, it's just fraught with danger. So it's I see things that have happened over the many years that I've been involved, and there's some lessons that you learned, and for me, that's sort of one of those lessons. The other one is buying with a family member. It might be siblings or cousin or something like that. Same situation. What happens when? Okay, so sometimes getting the right advice, especially from an accountant and a lawyer, mortgage broker, property advocate, if you cover off those 4 key areas to just see what the implications are for those key areas, if you get the green tick all the way along, fine, knock yourself out, go for it. But I think you'd find if you're going to buy with a friend or with a family member that you won't necessarily get the green ticks that you need to. Some people, as they evolve in time and they get a bigger asset pool and they've got their property and some other properties, they then might decide to do some joint investments with a friend or a family member. They might set up a trust situation and do something like that from an investment point of view. Totally different kettle of fish, different conversations, different outcomes. Then it can be possible. But I think as a first-time buyer to look at that, it's really not necessarily the way to go. The other thing that just on that before we get to the next couple of questions is a process or a stage called rent vesting. So what rent vesting is you rent where you want to live, and then you invest where you feel you're going to get the better long-term outcome. Now, especially in Australia, renting is somewhat frowned upon, whereas you look at some of the great cities of the world, New York, London, Paris, that type of stuff, so many people rent because they want to live in the hub of these great cities, and they know they can't afford it, so they actually rent. So I think we're seeing a bit of a change in that, and this rent vesting really is becoming an element and a strategy that newer people are starting to look at this. So you might want to live in that great suburb, but you can't afford in there, but you get all the benefits of the lifestyle, and then you buy an investment property in a good location, good growth, good yield. The people then help pay that mortgage with you, and then as the property grows in value, the yield or the rental return increases as well, and then it could potentially ease that burden. Then you grow some wealth that way. So rent vesting is certainly a good way to do it. So the other question was about just buying the cheapest property you can.
A lot of people would do that, wouldn't they?
Yeah, they do, because sometimes you get that old sort of adage that, just all property goes well, all property doubles its value in 7 years and the like. We've been hearing those things for a long time.
Just taking a little notch off their to-do list. It's just getting into the property market. I'll just find X, worth 250,000 just to say that I've got a property, but in actual fact, it's not the way to go.
Exactly right, and it's cheap for a reason.
That's right.
And it's a bargain for a reason. Why is it cheap? Why is it a bargain? What are some of the fundamentals around it that make it cheap? What are the fundamentals that make it a bargain? Yep. So I certainly discourage people for doing that. So I could actually show you 2 properties next to each other. So same suburb, same street, and their neighbours. Yep. And one may be what I call an A-grade property, A-grade being that's going to have good growth, good yield, what have you, over the longer term, and historically has proven that. Mm-hmm. Or the one next door could be the opposite. Yep. So what I mean by that real life is that one of the properties might be 4 on the block. So you own a quarter of the land and your building's on that. The one next door might be a tower of 100. So you own 1% of the land. And the thing with land, you don't have to do anything with land. Land exists. Whatever's above the land will depreciate. You need to, look after it, repair it, manage it, the whole thing. So If the bulk of your purchase price is in the building, not so much the land, the pure mathematics and the science around it realizes that, wow, that's going to be really expensive. You're going to have lifts, you're going to have probably car stackers, you might have concierge, you might have gyms, all those sorts of things. So, it's getting that advice, especially from a good advocate that's independent, that can actually give you some of that guidance and advice.
And a lot of people will see that as a benefit. They'll say, okay, there's an apartment building that I love. It's got the gym, it's got car park, it's got cafes. Some might even have saunas and swimming pools. And they're thinking, why should I pay extra gym membership? Why should I pay for extras, go to the swimming pools or saunas when I can have all that where I live? Even some have dog washers and so forth, when I can have that all in my building and pay, for a one better, 300, 350, depending on the area. But coming back to what you're saying is it's not always the best avenue to explore.
Exactly. And some of those owners corp or body corp fees in some of those towers are enormous.
Yes, that's correct.
Yeah. And can be quite challenging to sell later on down the track just because of the ongoing costs of them. So another example is student accommodation.
Yeah, accommodation. There's a lot of students that are in Melbourne. Their first thing is just to go rent, and possibly just buy like those studio apartments that you see mainly in the CBD areas and other suburbs. Pros and cons of that.
Yeah. Oh, look, first of all, they're tiny. A lot of the lenders don't really like them, and if you've never been into one, if you've never experienced what it's like, just the noise, the hustle and bustle, the peak hour traffic in the lifts, they're not a great investment. They never have been. They don't prove to be, but people think, oh, I'm a property owner. I've got 6 properties. Woohoo. Great.
Yeah.
Let's look at it in 10 years' time. Let's look at student accommodation from 10, 15 years ago. How's it going? And ask the people that maybe bought them, what was it like? Was it a good investment? So a lot of the stuff that I do in the property advocacy point of view is around this, what has performed well in the past and over the long term. And I talk about a lot of the fundamentals you can't change. So if there's something, it might be a floor plan, it might be the location, there might be, you might be literally next to a train station. Like, you could be within, 10 meters of a train station, like right on it. Would I live there? No. Would I buy it? No. Whereas 100 meters down the road, it might actually be a good one because you're actually buffered by the noise of the train and that sort of stuff. So there's things you can change and things you can't. So these are all really, really important. So just because it's property doesn't mean it's good.
That's right. And what happens in those cases where you do buy a apartment, for argument's sake, as an investment or an owner-occ, and then a few years down the track, they've got well, in this case, there's a train station. I'm not sure if you've seen in the news recently that it's erected as in above their property. So what happens in that scenario? Like the people, when they go to sell, it's obviously going to depreciate their investment or their owner-occ property.
Yep.
How can you avoid that?
Yeah. A lot of it's about, speaking to the council, find out what is proposed, trying to do as much research as you can to find out, there's a bit of vacant land there, or this is just a train line. And, Skyrail's a great example. They've moved stations, they've moved them in the sky and that type of thing as well. So, some of that stuff has only happened fairly recently. However, if you buy next to a freeway or a proposed freeway or a train station, there could be changes, out in the eastern suburbs of Melbourne at the moment, enormous work is going on with tunnels and roads and stuff like that. And it's unbelievable what's happening there. So if you're going to buy close to some of these areas, it may be something you regret. And from an advisory point of view, quite often when I look at properties for people, I'll advise them, get out, count your losses, and go and buy a decent one. So if we can't change those fundamentals, just waiting for it to improve, it doesn't necessarily make it a wise decision.
Exactly. I've got a question for you as well, which I think it plagues on a lot of people's minds. right?
Yep.
The old, should I buy an apartment to live in or should I buy land?
Yep.
What are your thoughts on it?
Great question.
It is a question that gets asked by a lot of people, and I
Yep.
think there's everyone has their own opinion.
Yep.
But from your perspective and experience,
Yeah.
what's your thoughts and what do you see in that?
Yeah. And sometimes I talk about my own situation that, when I was, in my early 20s and looking to get into the property market, I was looking at a closer in, say 20 kilometers from, say, Melbourne, where I could have bought a 2-bedroom apartment. I got advice from family to say, oh, no, you've got to have a backyard, you've got to have a house, and bought a house and land package 50 Ks out. Now, the price would have been the same, would have been the absolute same outlet. Then you go forward sort of 20 odd years, and the actual growth difference between the two was about $500,000. Now, I didn't know then what I know now.
Mm-hmm.
I didn't have a team around me like I provide that advice for people now. So, and there's still people out there who say, got to get land. It's all about the land. And I mentioned before about, having land is an important component as long as it's proportionate.
Yep.
So scarcity around a property is key. So what I mean by that is if someone's looking to buy a house and land and they do a Google Earth look at it, and if they do a 10-kilometer radius and they see a lot of farm, it's like, well, that's not very scarce. If they look at a property that's smaller, closer in, and they do a 10-kilometer radius and there's no land, well, guess what? It's going to be scarce because there's no more land in that area. And the reason why people find, generally speaking, these well-established areas around the country can outperform some of the areas is that the facilities that are provided. So the schools, the public transports, the cafes, the food, the beaches. Look at Melbourne as a classic case. The Bayside region, the beaches down there, what have you, and the drive along Beach Road there is stunning. It's one of the great drives in this country. It is a really beautiful place, and that's an X factor where a lot of people are attracted to that because they may not necessarily swimmers and all that sort of stuff. However, it just be near water, or it might be trees, or it might be some other thing. The lifestyle of major events in around some of our great cities around the country. People love to be able to have a short walk or a short ride or whatever to some great venues. So they're the things that really attract people. If you're buying an investment property and you want to rent it out, you want a long queue down the street wanting to come to the open for inspection because it's a great property in a great location. Exactly. You then might go out to a more remote area where there's no redeeming features, and it's like you might get a handful of people roll up for open for inspections for rent. So, and these are things that I've learned over a long period of time.
Beautiful. Obviously, someone that's single wanting to get in the property market, it still can be done.
It can be done if they can do it under their own steam. If they've got the deposit. So from that point of view, the family could help with equity in their own property to help, from the deposit point of view. If they've certainly got the good income to support the debt, I would encourage them, as long as they're buying a property that's in a good location, okay, and they can afford it, and back themselves professionally, that they've got good employment and income options, I would certainly encourage that. If it means they need to wait. And the other thing about a single person, they might buy a property, they might just get in, then they get in a relationship, and the property they buy may not be suitable for a couple, but it could be really suitable to rent out. So then you rent it out, move into a property with your new partner, but still keep that asset and keep that to grow. So that's another thing to look at, not only your situation now, but what it may look like going forward.
And the old term of having that 20% deposit is out the door. I mean, there's a lot of lenders that can, you can borrow with just a 5 or 10% deposit. It doesn't need to be just the 20% deposit. Like, it's been drummed in everyone's head for God knows how long. Gone are the days where it's just the big four banks. As a team at Electo Finance, we have access to over 40, 45 different lenders. So there's always an option where it's just not the old black and white 20% deposit. So that's one of the good things. Whereas, you don't have to wait if you don't have that 20% deposit. There's a different way to go about it, and that's the benefit of insisting or not insisting, but entrusting and using a finance broker like ourselves to engage in buyer's advocacy as well as yourself to gauge into all those different avenues. And yeah, good to have a chat with them.
It's a great point. And those, let's say 45 different lenders, they've got 45 different policies. And some of those lenders, a lot of people never heard of them, but we get access to them. So, you might choose 3 or 4 lenders as an individual and get knocked back and give up. Whereas it could be the 5th or 6th lender that actually may have done it. So we can find the particular lender. We've got the software, the access, the relationships to find those solutions. So that's, coming to us as brokers, it really does take away a lot of the fear and to get that decision.
Exactly. Well, thank you for your time today, Pete. Appreciate it.
And to you too, Pete. Good chatting.
We'll have some more delving into a few other topics in the future as well. So, nice chat. Thank you, Pete.
Thanks for your time.
No worries. Thank you.
Okay.